Let's turn back to China because the issues around the economy just aren't going away. It's been another turbulent day on the country's stock markets. After 2 days of heavy losses, the shares dipped again on Wednesday, closing down another 1%. China's central bank stepped in on Tuesday to try to halt the share slide by cutting interest rates. America's Dow Jones index opened a short while ago and it's up at the moment around 400 points in early trading. Celia Hatton has more from Beijing.
China's main market, the Shanghai Composite Index, ended in the red today after a series of ups and downs. And many analysts say that despite the Chinese government's best efforts to stop the bloodletting, this kind of uncertainty and market volatility is set to continue.
That's because millions of investors are coming off of a huge buying spree. Chinese stock prices grew 150% between June 2014 and June of this year. There was so much excitement surrounding the market that many borrowed money in order to invest even more heavily, at the encouragement of government officials who denied there was a market bubble. There was an implicit belief that the state would always be waiting in the wings, ready to keep stock prices afloat.
A vocal minority warned all along that this massive stock market boom was counterintuitive, that it didn't reflect the fundamentals from the real Chinese economy, which has been showing a slowdown for a long time. And that's why even though the Chinese stock market has lost an estimated 40% of its value, there's a grim belief here that we still have a long way to go before the selling stops.
Celia Hatton there in Beijing. Well, from Hong Kong, we can speak to George Chen, who's a Yale World Fellow, managing editor for Hong Kong news website scmp.com. George, good to see you. I was reading an article that you wrote just the other day about the blame game, which is now underway. Conflicting messages from Beijing and Washington as to who is culpable for what is happening.
Yeah, I think it's quite ironic, on Monday when the Chinese market went so wrong and then quickly the US market also, sank. And then all the things we see in the mainstream media on Chinese side and US side, they basically just blame each other. And then on Tuesday, when the central bank in Beijing cut the rates, and initially the Dow Jones Industrial Index responded very actively. And then a lot of Chinese netizens asked, was that the time the American investors should, say thank you to Beijing for, boosting the U.S. market? So I think, the blaming game, as long as the blaming game continues, I mean, it's certainly not very productive to sort of, get all parties work together to fight for the, if we already have sort of a global market crisis.
But does Beijing need to look a little closer to home? Because there are doubts emerging about official statistics in China. I mean, we saw the second quarter growth figures, I think up around 7%, maybe above 7%. Sure. And there were a lot of doubts about the veracity of those figures. And trust is a big issue in this, isn't it?
Sure. I think you are absolutely right. I mean, even domestically, a lot of local investors, are talking about whether the official numbers are reliable. If you look at, not the national level statistics, if you look at, Shanghai, Beijing, there are a lot of confusing, conflicting signals, hard for the government to defend, whether the GDP growth really, hit the 7% targets. And honestly, I mean, since the stock market crisis, in late June, we haven't really heard a top-level official like the premier or even President Xi Jinping, coming out to clarify the situation. All the officials who, tried to calm down the market was like a working-level officials. I mean, even the CSRC chairman, the regulatory, chief, didn't give a word about what's going on, plus, the uncertainties in economic development, worries about hard landing. So all things together, there are certainly a very high level of uncertainties, doubts growing in the market.
I suppose what matters most, though, for them is what domestic opinion is. What are people saying on social media about the downturn? Do they blame the government or do they look further afield? Sure.
I think on social media, I mean, Chinese investors now have very mixed feelings about the entire stock market crisis. A lot of people, began to complain about, as I said, why the government, the top level officials would, have been, so far silent on what's going on. And then on the other side, there are still a lot of people, local investors are waiting for the government to rescue although we have already, seen some reports, stating, Beijing is not going to rescue the market anymore. After initially they poured, so much money into the market, and then the effect was kind of limited. So the government was like thinking twice, what they should do next. And during that period of time, I think you definitely hear more and more anxious, complaints about, why there's certain, level of lack of actions in the market.
Plenty of nerves still around. George, very good to see you. Thank you for joining us on Impact.